It's 5 o'clock in London, it's midday in New York, midnight in Hong Kong, 4 a.m. in Sydney, 9 a.m. in San Francisco, and 10:30 at night in Mumbai. Greetings, good afternoon and good evening, depending on where you are in the world today. My name is Patrick L. Young, the IPO-VID livestream, that's Series 29, Episode 2, or in an easier round number, Episode number 170 starts here. Quite a revolutionary move afoot in India this week. All these headlines coming to you from Exchange Invest, which you can sign up to at exchangeinvest.com. The National Commodity Derivatives Exchange, NCDEX, they're looking to add stocks and bonds to their Indian commodity exchange. Might be a route to profit for them with less SEBI manipulation. Meanwhile, in the USA, there's no sign of Batman behind the solid announcement, but I think Nicey and Ice last week delivered a solid kapow to the Texas Stock Exchange, which now has a large bubble marked splat across its logo. After a $160 million money raise, an ill-conceived attempt to push listings fees down in the NASDAQ Nicey Country Club duopoly is, I would presume, dead on arrival on its current stunted model by moving the Chicago Stock Exchange out of the, well, wannabe slum of Illinois. There is a great opportunity for Texas. Nicey Texas is going to be the new name, and with the realist revolution gripping US foreign policy, it's fair to say that ICE just delivered a stunning dose of market realism to the dreamers of the Me Too market copy playbook. The US Country Club listing model has been robustly defended once again. Meanwhile, thank goodness for the good folks at Thomson Reuters, I say, as someone who happens to have a small and modest information publishing arm. The despicable copyright thieves of this world are just that, thieves. It costs a fortune to define good content, and we endeavor to keep ours well away from rapacious artificial intelligence bots, as well as those who try to pirate Exchange Invest content. Well done, Thomson Reuters, for defending their domain in the US courts in the course of the last week. And finally, I'm delighted to report a fabulous 27th annual AFM conference, which was the highlight of the week in the parish. Last week, as emerging exchanges from all around the world gathered to meet and discuss developments in Nairobi, Kenya. Thanks to IPO-VID alumnus AFM President Chris Sturgis for organising a brilliant capacity building workshop hosted by the Nairobi Stock Exchange themselves, and the AFM under Chairman Patrick Kenny, himself also an IPO-VID alumni, and Secretary General Christina Kasha, who coordinated a terrific conference hosted by the Nairobi Stock Exchange in downtown Nairobi. I was delighted to deliver a keynote speech to the assembled audience and look forward to the 20th annual meeting in Taiwan next year. Now, our guest today, ladies and gentlemen, we're looking at a fabulous topic, multi-currency mercantilism, and I'm going to quote our guest. Good infrastructure grows markets. China proves it. Singapore proves it. Dubai proves it. For 25 plus years, I've grown global capital markets with infrastructure, liquidity solutions, and effective risk management. Those are the very, very words of the lady behind the book, Multicurrency Mercantilism itself, and I'm delighted to be here with the remarkable Kathleen Tyson, who, amongst a cornucopia of achievements, led the operational design for CLS Bank. If you've never heard of CLS Bank, that's how you actually take the foreign exchange market and settle it in a coherent fashion, which actually meant that it grew from, what was that, $940 billion a day to over 14 trillion, now you're talking real money, in daily settlements. She's also supported the modernization of central banks to fully digital real-time operations and vastly more things besides. I can't possibly do her justice in such a short intro. But Kathleen, welcome to the show. It's a joy to see you today. Where in the world are you?
Thank you, Patrick. I'm in London, and well, on an island near London.
On an island near London. How interesting, how fascinating. An island that has not yet gone for UDI, although presumably if Mauritius wants it, then the Labour government will probably sell it to them, I suppose.
Well, we do occasionally talk about taking up the bridge.
What a cunning concept. A cunning concept altogether. So Kathleen, tell me, how did you first get into this fascinating world of global markets?
Well, I was in law school, and I spent a summer working as a clerk for a law firm in Seattle. And I realized that I was going to hate my life billing it in 6-minute intervals for a commercial law firm. So I went back to university, law school, a bit depressed because I was already $50,000 in debt. I was going to be more in debt by the time I finished. And then in the first week, I saw an index card pinned to the notice board saying the Federal Reserve Bank of New York was going to be interviewing. And I said, that's my job. That's where I'll be. And so I went to the interview, and I must have done fairly well because they hired me as a summer clerk for the following summer. And I never really looked back. I loved being at the Fed. When I was full-time there, the following year was the 1987 market crisis, crash, Black Monday. And I was in the room with the president of the New York Fed when the first Greenspan put was arranged. And he told the banks that the Fed would backstop them, keep lending. So then I was one of the founder members of something called the Settlement System Studies Group to study the linkages between markets and liquidity and crisis management. And from there, I was poached by the Securities Investments Board in London, and I've been in London ever since, except for a brief stint in Dubai. And after 4 years with the SIB as Assistant Director of Securities Markets, I decided I wanted to build things. And I went to Clearstream and I started building. So the first thing was tri-party repo with Sahita Wan, which is now a 5 to 7 trillion a day interbank liquidity market. Then optimized derivatives collateralization for over-the-counter derivatives, swaps. And I got US Treasuries into Clearstream, which globalized US dollar liquidity so that banks everywhere could borrow in a liquid dollar market. So that's how I got my start.
That's quite the start altogether. So when did you actually arrive in the UK? Remind me.
1990.
1990. Wow, brave new world. The tail end of Mrs. Thatcher's regime when the UK was still a go-go and all looked ever so terribly exciting. So
it's a funny old world.
It's quite an incredible world altogether. I mean, when you think about it now, so you've been here for, good grief, at 35 years, which is at least a full sentence of murder one in the UK most of the time. You didn't get any remission. Are you still happy to be in the UK, or do you yearn for the possibility to be back in the US?
I still need to build things in the global market. So I still need to build capital markets for global operations because things are changing at pace, and the new systems to meet the requirements for managing transition aren't there yet. So I still intend to build some new systems for global capital markets that will be win-win and reduce risk. So there's that. But I'm happy living where I live on the Thames, and my boys are grown and they're good men, well launched now. So it's really, I'm very happy here. I just still need to build some new kit for the global markets.
So you need to build some new kit for the global markets. London's a good place to do it, being in the middle of the global day and also with still a remarkably cosmopolitan financial centre in the city of London, it has to be said, which I think is one thing that people don't appreciate, the depth of history and the pure melting pot that the London financial centre is, in a way that I think no other financial centre is, even though New York may be bigger in total trade terms.
That's very true. London has a 1,000-year history of non-discriminatory rule of law in commercial markets, mercantile markets. But that model is also transferable. So, for example, Dubai International Financial Centre has English law as its commercial law. And that's part of why Dubai has been such a success.
Yeah, and it's very interesting, actually, you talk about that, because we had actually one of the leading figures, Simon, from the ADGM, the Abu Dhabi Global Market, and they did exactly the same thing as the Dubai model some years after you were working on that. And actually, they took it even to greater extremes because they exist, on their own island in Abu Dhabi. So they really took seriously the idea that the City of London controls the bridges to get from South London into North London, etc. And I think it's very, very interesting, as you say, that it's a portable skill. And also, let's face it, the one thing that people don't follow about financial centres is that it's a fantastic model, because we've yet to see a point where a financial centre has been created that can offer a product that people want, that has actually led to a surfeit in the market. I mean, compared to industrial policy, everybody wanted in the 1970s, 80s to have car plants, but actually there were only so many cars we could drive around in, so many washing machines we could use, etc., etc. Whereas the demand for financial services remains essentially untapped. I mean, it's essentially infinite in terms of the amount that you can supply in order to fill these holes in the business.
Well, yes, but there have been financial centers where there's been a great deal of ambition, but not necessarily the same amount of delivery. So there is a bias to quality and to predictability. And of course, nothing's ever tested until there's a crisis. One of the things I'm really proud of is that when Lehman failed in 2008, the laws I wrote in Dubai kicked in, and there were 0 client asset losses in Dubai International Financial Center. And all of the client assets were transferred to peer brokers before the exchange opened in the morning, so that clients remained liquid. There were very few contagion effects, very few liquidity effects. So in that sense, DIFC managed that crisis much, much, much better than London, where we closed the exchange, we closed the clearinghouse, and there were 32 billion in client asset losses.
Yes, that's quite true. But again, it is an interesting point, because it's not just a given because you open a car factory that you'll sell cars, and it's not a given that you'll open a financial center and you'll sell financial product for a full cycle and beyond. But the point is, if you have the right design, and particularly if you have Anglo-Saxon law, you've certainly got a huge opportunity to manage to get something right and find your niche that will work.
Well, that wasn't really common law. That was statutory law and regulation, which I wrote in 2005.
No, that's interesting, because that leads us on to your fascinating, I mean, through tripartite repo, which is of course a fascinating thing that you built with Zahid Awan and so on. It's interesting where we've ended up in the world today, isn't it? Because the US dollar is more supreme than ever before. You, as you say, managed to bring clearing and settlement of US Treasury bonds into Europe and so on. Yet we're seeing a problem with the real economy. We've got to a point where there is ultimately a problem with the US dollar being dominant. It's fascinating. If you want to use it for trade, it's easy. But actually, it's become incredibly difficult for bilateral trade to exist in currencies outside of, I don't know, I mean, where you would count it, I would say a half dozen or so major currencies. And then beyond that, it's incredibly tricky.
Well, it is tricky because banks aren't willing to hold reserves in most of those currencies. Because they're subject to depreciation, like we see with the Indian rupee, which is at a record low right now against the dollar. So you wouldn't necessarily, as a bank, want to hold great reserves of Indian rupee unless you're an Indian bank. So the difficulty with 80 countries determined as policy in 2023 that they were going to shift to local currency trade in their own or partner trade currencies. But that's not happening at speed. It's happened for Russia. It's happened for China because of scale. China now does about 55% of its trade in renminbi. But it hasn't happened for other countries because globally, banks don't have access to that currency except through intermediated brokerage by the top banks, the dominant banks. And there, the FX spreads are huge and the credit spreads are huge. So there's a lot of scope for making that market more efficient, for giving currency optionality lower costs.
And so that leads us into your recent book, Multicurrency Mercantilism. And I think you've started explaining the thesis. I find it one that's absolutely fascinating. There is the book on screen indeed. I do believe we've got a cover of it somewhere around in the production team as well that they can flash on screen. It's a it's a very, very interesting tome. It's a fascinating thesis. And it's one that really hits home at, well, for want of a better American analogy, the relationship between Wall Street and Main Street, because multi-currency mercantilism, as I see it, is all about world trade. I speak as a proud member of the World Traders Company in London, and therefore trying to make that trade happen more easily without having to put everything through the US dollar or another major currency.
Yes. And as I say, as a policy matter, it's been decided. As a pragmatic matter, it's difficult to implement because there are cost differentials in most of those currencies. Many of the countries are trying to link their domestic payment systems, but that's not really a model that scales very efficiently. It's still going to be quite difficult for any particular corporation or exporter to manage a multi-currency optionality just on their own for their own benefit. So
sorry,
yeah,
go ahead.
well, no, it's just it really needs to be intermediated by banks, and for that to happen, the costs and the infrastructure, the costs have to come down, and the infrastructure has to be reliable.
So how do we manage to put together that infrastructure and make the process reliable?
Well, that's a trade secret, I'm afraid. That is what I intend to build. I intend to build
That's what you intend to build.
Yes.
Excellent. So, but looking at it from the outside, I mean, this obviously leads us to what I think has been the curious kind of myth of talking about the BRICS. And I'm not trying to disparage the BRICS per se as a potentially enormous trading body, given the fact that it has Brazil, Russia, and India and China alone within its different entities. But the problem obviously is that really, on current rules, it's quite difficult to see that not ending up as being some sort of situation where China ends up with lots of other people's currencies that it doesn't really want and finds quite difficult to turn into something that's reasonably productive. So, I mean, there's obviously got to be a series of stages in which we can try and make the world more of a multi-currency, multilateral trading entity, I suppose.
Yes. I don't think China really is got an issue because China's trade, it's the largest importer of goods and it's also the largest exporter. And most of its trade now is with Belt and Road Initiative countries. So the BRI component of Chinese trade is now larger than US, EU, and ASEAN trade combined. And they are really seriously focused on growing the global south, and they're doing it. Both by importing from the global south and exporting to them. So that's actually more balanced than you'd expect. The largest imbalance is, of course, between the US and China, where the US is a huge importer and less of an exporter. And Trump has indicated he's unhappy with that. But it's really going to require give and take on both sides there. For smaller countries, currency optionality is actually a source of security because their trade and their partners for trade are really quite predictable. And they know when crops are coming in and they know, when the cocoa beans are ready for shipment. So they have more predictability on that than perhaps we often do in financial markets. So they can plan better about importing and exporting and manage that in a reasonable way that will actually improve with currency optionality.
Yeah, that's very interesting because you got somewhere then like, say, a tiny country like Rwanda, which is currently just in the process of selling the tobacco crop, and therefore it's all going to settle in, I don't know whether it's a couple of weeks or within a month or two, and therefore they suddenly have this huge amount of money comes in again. So how can multi-currency mercantilism then better work for a nation, a small African nation like that, which has a very small currency that is not currently not particularly easy to exchange for anything else?
I do think that it is going to work, and I do think that it actually reduces risk. But the key thing is pricing those exports in your domestic currency, not in US dollar, and not offshore. Because what tends to happen with those countries, where especially if the plantations or the mines are owned by foreigners, large multinational corporations, and they take the shipments offshore and sell them for US dollars in Western markets, is that very little of the revenue comes back to the country of origin. Now, if there was a case a few years ago, I think it involved cocoa beans in Kenya. I'm not sure 100%, but that rings a bell, where the central bank actually intervened to prevent the ships from leaving port until there was settlement in the local currency. And the reason for that was because if if there wasn't settlement domestically in their own currency for that export, then they wouldn't have had the money for the federal budget. So what currency optionality can do is make a country much more secure, because the pricing power of the market moves from Western offshore tax havens in general to their own borders, within their own borders, so that they actually secure the revenues domestically for what they've produced. And that in itself is a revolutionary thing. The whole World Bank IMF complex is designed to avoid that. But if countries can move towards local pricing in local currency for exports, they actually secure the revenues that can help them develop, that can help them provide stable funding for housing, for education, for school meals, for the things that actually make a huge difference in 20, 30 years of development.
Yes, that's two fascinating points, because the power of pricing is obviously in your own currency. It's very important. But also, I mean, as you mentioned at the very start, the whole problem for many emerging markets, where they're essentially selling a raw commodity and getting none of the process uplift. So they're only getting whatever it is, 1 or 2 or 5 cents in the dollar compared to what is ultimately the end product. And if they can add any degree of refining, value add, even canning the stuff or whatever they need to do, then it can make a very, very significant benefit to the home economy. But that's a fascinating point you make about the pricing in domestic currency and making sure they get the domestic currency. It's a truly revolutionary figure for the developing nations.
Well, and it promotes economic stability. I've started saying last year that currency optionality is a matter of national and economic security. And I think that this year it's becoming more and more obvious you look at a country like Burkina Faso, which has one of the youngest leaders in the world, Traoré, and he's only been in office less than 3 years, and yet they've managed to almost double agricultural production. He's building domestic plants for car production, for tomato canning, for gold refining. He's bringing all of that business internal to Burkina Faso, and it's really quite an inspiring story, because it's happening at speed where you really wouldn't have expected the domestic capacity to exist. And he's doing it with zero IMF finance. It's all domestically financed or financed with investment partners.
Yes, it's fascinating that. I mean, we were having a lot of conversations last week in Kenya and around Africa, actually, in recent weeks, about people talking to them about the opportunity to really incentivize a core group of local investors to put a certain amount of risk capital down, because it's amazing what the multiplier effect for that can do. And you get the ultimate benefit that you don't get from global investors, which are those investors are going to keep investing in the local market because they are local people.
And they will have a stake in the growth of the children, and the education of the children, that a foreign asset stripper won't.
Yeah, no, exactly. And this has become a problem in our index following world, where the indexes are lovely and they produce lovely returns, but they may actually strip out your domestic economy simply because those aren't the things that the investors are thinking about when they're going through looking for returns.
Yeah, the FTSE's got a great return on it. But Britain itself has 30% of children living in poverty households and undernourished, so that at age 5, British children have been getting shorter for the last 7 years.
That's a stunning figure. I mean, that's a stunning and terrifying figure, actually, about the UK.
And it's not that much different in the US, where children are also getting shorter. And the UK and the US are unique in the OECD for this phenomenon. And it is very much a function of child poverty and malnourishment. And that, of course, affects their ability to learn in school and educational and health outcomes for their entire life. So, it's there's what I like about what we're seeing now, and the sort of real-time nature of the world now, where we're watching everything in real time and seeing policy divergence, is that we've been spending 30 years harmonizing everything. saying there's only one way to do things if you get a loan from the World Bank. There's only one way to do things if you get an IMF program. IOSCO and the Bank for International Settlements say that there's only one way to have markets or one way to regulate banks. But now we're discovering that actually there are other options, and they may actually produce better outcomes, particularly under stress conditions. And so I'm actually excited by the moving away from everything being rigidly harmonized, which concentrates risk, toward being able to evaluate multiple systems, multiple approaches to see what actually works best under what conditions.
That's fascinating. We're going to come back to rigid harmonization in a moment. Well, actually, we're going to keep on to that topic in one way, because we've got an interesting question has come in while we're talking multi-currency mercantilism with the great Kathleen Tyson here. Frederick Benno has asked an intriguing question, actually, and nothing to do with the idea of a single-sized state or intervention fits all. I'd love Kathleen's thoughts on the euro sometime during the interview. So do tell all if it's not
okay.
secret.
Well, remember in the Biden administration, Antony Blinken told us that you're either on the menu or you're on the table, or you're either at the table or you're on the menu. Sorry, got it the wrong way around. Europe has just discovered at the Munich Security Conference that they are not at the table, that they are on the menu, and that the proxy war in Ukraine was not just a proxy war using Ukraine. It was also a proxy war against Europe. And the euro was destroyed as part of that proxy war. If you're a global currency hegemon, like the United States and the US dollar, you need to kneecap every rival, allies or not. And so when in 2017 or 2018, I forget exactly when it was, the ECB set up a division for the globalization of the euro, I knew they're going to regret that. And so destroying the euro became part of the scenario planning for Ukraine, which, obviously it's been intended since 2014, and NATO admitted that, Stoltenberg of NATO, and confirmed by also various other officials in Europe. But the destruction of the euro was not widely seen as being one of the objectives when it was. And clearly the blowing up Nord Stream, so that Europe was forced to buy expensive energy in US dollars from the United States, kneecapped the euro. If they could, they lost all the cheap gas that they were getting reliably from Russia, either through sanctions that they imposed on themselves or through the destruction of the infrastructure or turning off the pipelines through Ukraine. And now they're stuck paying 4 times as much, sometimes more, because Russia's long-term contracts are very cheap, to import expensive energy from the United States or from the Middle East in US dollars. And obviously they have to sell euros to buy dollars, and that's undermined the euro. So I'm afraid Europe, sorry, you're not at the negotiations to end the Ukraine war. You are, in fact, on the table.
Well, there you go, Frederick. Thank you very much for your question. I think that answers it quite succinctly and quite directly. And indeed, at this point in time, let's permit
I messed up the metaphor again. They're on the menu.
They're on the menu. They absolutely.
They're not at the table. They're on the menu.
They're on the menu. Sorry, my apologies. You're quite correct. They are absolutely on the menu.
Okay, it was my fault. I messed it up.
That's a very, very, yes, it's a very, very concerning moment for Europe per se. I must admit, last week when I gave my keynote in Nairobi, actually, I did a brief state of the great powers, and I had the US, China, and the EU. And for the US, I had OpenAI. For China, I had Deep Chat. And for the EU, I had one of those totally frustrating water bottles that you can't take the top of. And yes. I said, the truth is, OpenAI may no longer be the absolute market leader it was just a couple of weeks ago. But the truth is, America's got loads of money and it's going to keep propelling in the same way. And okay, the moat has shrunk and Deep Chat has shown us something completely different in the way that you can deliver that. But these two people are powering on with a risk-taking mentality, where the European Union is busy scarring our cheeks when every time we want to try and get some H2O into our veins, which is kind of like pretty much a fundamental human right in my view, not the scarring of the cheek, obviously.
Yeah. No, Europe focused on rolling out AI regulations rather than rolling out AI.
Scary, utterly scary. I mean, quite incredible the way that they approach that from, well, the precautionary principle writ large, which ultimately I don't seem to remember primeval hunter-gatherers turning out and going, well, now what are the risks to hunting today? Because the simple answer is, if you don't eat, you die. But there you go. Now, at the same time as you don't eat, you die, one of the things is that in many ways, the future of trading never sleeps. I'm going to give Kathleen a little break for a second so she could be replenished for the second half of this show. The US stock market is expanding beyond regular hours. So therefore, the excitement is not just about NYSE Texas. It's also about what will happen when NYSE get their permissions to open up overnight. But for the time being, Blue Ocean Technologies have been paving that way. More players are set to enter the space during 2025. Will this be a game changer for global investors? Well, here's a short video to discuss the theme.
Meanwhile, in Big World, we've talked before about the incredible US stock market. 60% of the world's share value is listed in the USA. At the same time, the US market has become a lot more open to all manner of investors recently, as platforms led by Blue Ocean Technologies have begun operating in the twilight hours between 8 o'clock New York time and 4 o'clock the next morning. The market is proving a huge success, not that many American investors are involved at those hours. A raft of potential new entrants are working on overnight markets to launch in the next year or so. Right now, Blue Ocean is essentially the only major overnight game in town, and it has volume and ground game in key Asian centres already. Watch this space for a fascinating series of 2025 developments. For more in Big World, like or follow.
And moving on from that fabulous tale of overnight trading, with Blue Ocean actually having opened their Korean office just last week in Seoul, and a lot more happening in that space. Time for our book of the week, ladies and gentlemen. Our book of the week this week is not Multicurrency Mercantilism, because actually that was our book of the week several weeks ago. Rather, this time around, it's an older book, a quite fascinating parable and tale, The Fisherman and the Rhinoceros, How International Finance Shapes Everyday Life, by Eric Brice and François de Varenne. Originally written in French, and I have it on some quite good authority that it was rather the challenge to render this semi-philosophical work in English. But nonetheless, it does a brilliant job of bringing alive, with various parables and stories, the exciting tale of how global trade and global markets work. It's a super paperback. It's a terrific read, I've got to say. And whether it's in print or not in print, ladies and gentlemen, you can find ways and means to get the book. That is our book of the week this week, The Fisherman and the Rhinoceros. And the useful information I can offer you, having just been in Nairobi in a game park only a few days ago, is that if you happen to encounter a rhinoceros, it's okay if you come at it from the side, but if you're in the way of its path, then it's not going to be a good outcome for you. Right, back to multi-currency mercantilism with the fabulous Kathleen Tyson. So Kathleen, talk to us. I mean, you've just gone through the problems with the rigidities of this sort of mono world, which in many ways came in over the course of the last 20, 30 years, and the way people are now thinking outside of the box. And I suppose one of the things I have to say is that every time you have somebody tries to think about finance and markets anew, and more than 150 economists write you a letter saying you're wrong, you're probably on the right thing, as most recently President Milei discovered last year in Argentina, as he was busy taking a chainsaw to the economy, and has an outcome that simply nobody on the economic spectrum seemed to consider was possible. So I mean, multi-currency mercantilism, surely then one of the biggest problems has got to be trying to develop this is there are so many figures, so many vested interests who are going to try and stop it happening.
Possibly. It's much easier for economies where an enormous part of the economy is state-owned, like Russia or China, to move to local currency trade, because the banks are aligned with the interests of the productive economy and want to expand trade, want to expand exports, want to grow local consumerism. where perhaps in the West, the model is that banks are more predatory and markets are more predatory. And they are only really interested in extracting maximum rents, maximum profits, and don't really have a long-term stake in either nations or corporations or development of the local economy. So it won't. The future is already here. It's just not evenly distributed, and that's going to influence the development model increasingly that countries choose.
That's fascinating. So, I mean, in one way, that's interesting. You're making the point about, yes, Russia, China, and so on, they can manage to organize things from a central perspective. And back in the day when you could still go there fairly easily, I can remember speaking at the Moscow Open Innovation Forum, which was a fascinating cornucopia of innovations where the invisible hand was apparent, but also the very visible hand of the government was also apparent in shaping what was going on and the way that the banking sector was going to support it. But I suppose another thing is also there's the opportunity to grow niche trade at levels that just simply don't move the dial for the USA, and therefore in dollar terms, people don't appreciate it.
Yes, I think that's right. And, for example, is it? I think it's Cambodia is now exporting durian, which it never used to grow, because it has a high-speed rail connection to China, which is its principal market for durian. And so they switched to growing durian because they can put it on their high-speed trains and deliver it straight to market. That is having impact on Philippines, which has been actively hostile to China and, very much in the corner of the United States. Well, it's been a colony for over 100 years. And so Philippines used to export a lot of durian to China, but it's now finding itself frozen out. So but China's insight was that if they built the infrastructure, the market would come to them.
And certainly that's a fascinating point, because of course we can then instantly jump back to all of those well-known, well-worn statistics, like the way that whatever it is, 50% of all tomatoes grown in Egypt don't even make it to market in the big cities, for the simple reason that the infrastructure is so dire for transport. And that is a very, very key point. Let me just jump to, we've got quite a lot of correspondence here. Thank you, everybody. And also, by the way, will you do us a favor? Can you show us a little bit of love? You can show the love for Kathleen. It doesn't have to be for me, but appreciate it.
And back certainly,
yeah, that's absolutely fine. The AI bots, they need to know that we're loved here. And if they see that love mark, that little heart, that gets more people to watch this show, and therefore spreads the word about multi-currency mercantilism and indeed the brilliance of Kathleen Tyson. And J. Tom is telling us that he's here because of Kathleen. Good for you. In reaction to your comments on the European Union, well, we've got a laughing out loud and lots of thumbs up from Louis Victor Faulkner. And then we got, a very interesting question coming from my go-to favorite commodity woman of the world, Anne Berg in Chicago. Good evening, Anne. I hope you're well. And indeed, another IPO-VID alumnus. Do catch her back show on whatever platform you're watching this on today. Anne Berg says, Kathleen, a most intriguing perspective. Back to multi-currencies. How do you avoid the extreme depreciation of local currencies caused by fiscal irresponsibility or graft corruption to create the local stability?
Okay. It's an interesting question coming after Elon and his team have found more than 5 trillion in graft and corruption in Washington in 2 weeks. So it's not a problem that's necessarily limited to emerging markets. I think graft and corruption, and to a certain extent, have been baked into a lot of systems for a long time. Now, President Xi in China explicitly determined in his second term to attack graft and corruption directly. And China executes about 300 corrupt officials each year. And Xi has been very clear, if you want to be wealthy, don't come into government. If you want to serve the people, then join the party and serve the people in the government. And so he's managed to crack down on corruption to a very great extent. I'm not saying it's not still a problem, but they have active systems to detect it, to deter it, and indeed to sanction it with the death penalty or with very long prison terms. One of the things China is doing is commoditizing their model of governance and offering to, they don't push it on people like we tend to do, but they offer it to their partners in BRI and their trading partners so that they can educate and build systems to improve governance and government operations, as well as infrastructure, universities, hospitals, everything else they do. So they make that an option that they can help countries to get corruption under control. And again, if the patronage networks of IMF, World Bank, USAID, NED streamed an enormous amount of money to actually embed corruption in the world. So now that USAID and NED are no longer there, we may see a step change in the incentives in the world to improve governance.
Now, that's a very interesting point. The suggestion that actually reducing some of these Western aid programs may be something that actually manages to reduce corruption. I'd always actually thought US aid was just an arm of the American international hotel networks, because wherever US aid went, they very quickly knocked up, like in Nairobi last week, a beautiful JW Marriott, interestingly enough, funded by Chinese money. Now, there's a fascinating incongruous context of globalization in many ways, or maybe the great brave new world forward. But yes, it's fascinating how that has developed. And ultimately, I mean, there's huge problems on the ground in Africa at the moment. People are very worried about their US aid money, but it happens to have been a rounding error of the total budget that was actually being allocated to these places, which is horrific.
Well, in a lot of the dark flows, we haven't actually seen yet because they go through various cutouts to the ultimate beneficiary.
Yes, indeed. And we also have the mysterious way that certain senior officials can suddenly be worth 30 million after, making $250,000 a year, which always reminds me of, Charles Hockey, the man who was penniless, but by the time he retired as an Irish MP, his flower bill in the Dublin townhouse itself, worth 15 million, was more than the flower bill was worth more than his gross salary as an MP, which was his only declared income, as I seem to recall. Yes, rather tricky, those sorts of issues. So therefore, I mean, is there not, I mean, do you think that a multi-currency mercantilist situation, though, will improve the competition between states and therefore drive out graft simply because people are able to trade more easily with different countries? Or am I just simply turning Gresham Copernicus law on its head in a very, very naive fashion?
Oh, I mean, there are 189 countries in the world. It's difficult to know exactly what's going to happen for each of them. What we are seeing is different models, some of them very inspiring, like Burkina Faso. And Traoré has now survived at least 6 assassination attempts. Because that's what tends to happen to African leaders that are inspirational. But he has proven that a country can very quickly take control of its own destiny and improve economic outcomes. You talked about tomatoes. He's building his second tomato processing plant because the model before was to export the tomatoes, import tomato paste. When he said, that makes no sense. We have to pay 10 times as much for the paste than we get for the tomatoes. So he built the first local tomato plant that went live last year, and he's building another one to go live this year, so that instead of exporting the tomatoes and importing 10 times more expensive paste, he's making the paste locally, and the profits go to local investors as capital that can then be reinvested in the economy. The same is being done with oil, where they used to export crude and import refined fuel, and a lot of African countries are now building their own petroleum processing plants, refineries, so that they can get the fuel they need from the oil they have, which you would think that makes sense, but that was not ever the IMF or World Bank model.
Yes, it does bring into question a lot of issues to do with the IMF and the World Bank model. So tell us, I mean, what is the best way you think we can move towards building a multi-currency mercantilist framework?
It's not me doing it. And one of the things I respect about BRICS, and this is why BRICS was deemed a joke for its first 8 years, it has no hierarchy, has no head office, it has no executives, it has no staff, it has no rules, and it has no mechanisms for enforcement. Everything that happens in BRICS happens at the bilateral level, where two states or a state and a non-state actor agree to do something collaboratively because it serves them both their interests. And sometimes, there are states that don't get along. India and China have a very patchy history and were, until about 2 years ago, antagonistic to each other. At least India was very antagonistic to China. I'm not sure China much cared. And so India has a massive, massive, massive coastline, but it didn't have a single supercontainer cargo port. China, of course, dominates the world in supercontainer cargo ports that are all hugely optimized and efficient. But India didn't want to do a deal with China to get a port from China. But because BRICS works on identifying a need and matching a partner, India partnered with Dubai Ports World, which runs highly efficient ports all over the world, including here in the United Kingdom. And it's going to get its port through Dubai Ports World. Now it's a complex system because it requires individual countries or non-state actors to define their need and then find a partner who can help them develop that's acceptable, that they're going to be able to work with. But BRICS does that. And so, one of the fascinating things I watch is the contracts that are done on the margins of BRICS bilaterally, which are now in the hundreds of billions every year.
Yes, that's a very interesting point that you're making. How we deal with the bilateral and the power of bilateral deals going forward.
We don't. It's not up to us. We don't get a veto.
That's exactly no, just.
Yeah, it's just not up to us. It's up to them.
We don't get a veto, and it's up to them to manage to deliver what we're going to be looking at doing. And certainly it is a fascinating point you make about the fact that BRICS has managed to get this far without any degree of secretariat whatsoever, whereas it seems all other multinational organizations invariably start by having a huge bun fight over which office is going where and how many people there will be in how many places. And well, having been to Nairobi last week, where there's a special queue for passports for all the people who work for these quangocracies, that they get into the country faster simply because they may not be Kenyans, but in some way, shape or form, they're deemed to be something similar. And actually, we've got a very, very interesting add-on. Frederick Bueno is asking you, so in the next 5 years, BRICS currencies versus USD, a simple binary, up or down?
I don't make predictions about financial markets or about prices. It's difficult. We're in a time of transition where things are very uncertain, and we're waking up to surprises every morning coming out of Washington, D.C. New executive orders for this, new tariffs for that. Let's have peace with Russia. It's anybody that tries to predict in this environment is brave. I'm not that brave.
Well, let me ask you a question, actually. I think it's interesting, and I totally appreciate your viewpoint because I think it's difficult to come down to a simple binary, particularly when you've got a multilateral organization on one side and a predominant hegemon on the other. But putting a bit of perspective on this, I mean, pretty much my entire life, I mean, from I was a pretty sentient child sometime in the 1970s, although I may not have been reading that much economic stuff at that point in time, they've been talking about this being the end of the US dollar's hegemony. And here we are, fully 50 years on. Concepts like the limits to growth seem to have gradually gone away, although the Davosians who originally came up with the idea that the limits to growth needed its own conference still have the conference without the same attitude quite. How does this move forward? I mean, are we actually at a point where the US dollar is peaking, has peaked, is going to go down? Because that seems to be such a popular discussion and has been for 50 years.
Yeah.
Or is there something else happening?
Well, I mean, one of the taglines I use for the book all the time is that the alternative to the dollar is the dollar and all other currencies. So it's not the end of hegemony. It's not the end of the dollar. And part of that is because of the financial dominance of the dollar in financialized markets, which are hundreds of times bigger than mercantile markets. And I've got some numbers on page 41 of the book. You know, according to World Trade Organization, Global Outlook and Statistics, merchandise trade, so that's mercantile trade in goods, is only 25.3 trillion, and services trade 6.8 trillion, digital services 3.8 trillion, and oil and gas about 6 trillion. So all of the trade in all of these goods and services that's being done globally in a year is 46 trillion. It might be as high as 85 trillion if you throw in services and other things. But that's actually a rounding error when you look at the size of financial markets.
Yeah.
Bonds outstanding are more than 360 trillion. And they trade 1.5 trillion a day. So about settlements of 315 trillion annually. That's four or five times bigger than trading goods. Repos and tri-party repos for interbank secured finance, about 18 trillion a day. So annually, 4,000 trillion.
Yeah.
Yeah. Equities, 108 trillion, about 39 trillion in settlements annually.
Yep.
Derivatives, 635 trillion in notional value. So about 1.4 trillion a day in margin movements. Foreign exchange, 7.5 trillion a day on average. Peak day, 14 trillion. But a global annual turnover of 1,900 trillion. I built that, and I still don't know what that's for. But the point is, all of that financialization is dollarized. So whatever happens in this tiny mercantile market that's between 45 and 85 trillion annually, the dollar continues to be dominant in financialized and capital markets. That's why I think that the fear mongering about the end of hegemony is wildly overdone.
Yes, it seems to me to be a permanent cheap shot, and it drives a certain cadre of journalists we don't have to mention from which sources who say, oh, the BRICS are going to build their own currency. That's the end of the dollar, as if it's all going to be finished by Tuesday week. And that's why I love pointing that out to people that, I mean, peak dollar was a wildly discussed topic by 1975. And we're now well past the 50th anniversary of that having been done, because it started somewhere around the oil crisis, 72-73, if not previously when Richard Milhous Nixon took the US dollar off the gold standard, indeed. In fact, actually, that leads me to an interesting thought, which was, Burkina Faso producing their own oil, their own refining of gold, starts to lead me to sort of think, perversely, is there a mercantile advantage to backing your currency with some sort of a precious metal like gold in the future global bilateral economy?
Well, this is what's going to be interesting in watching the Sahel states that have broken away from French imperialism, because it was still very much an imperial control model. They were all forced to use the franc Afrique. They were all forced to export their gold for foreign refining. And then France had first right to buy the gold at massively discounted prices, so that France has the most gold in Europe, pretty much. They've broken that model. They are now keeping the gold at home. They have nationalized the mines. They are building domestic refineries for the gold. And they are building up internal gold reserves. And they have announced that they will have a joint currency, a currency union for the Sahel states this year, instead of using the franc Afrique. So this is very much a work in progress. But obviously, having domestic gold and holding their reserves domestically instead of holding them offshore in Banque de France or the Bank of England or the New York Fed will help stabilize them and stabilize confidence in the new currency.
Well, at that point, looking towards a brave new world of multi-currency mercantilism and the many opportunities there are, and I think the great thing is that however you look at this, there's a huge possibility to grow the pie for everybody. It's time to look back 25 years to my book, Capital Market Revolution, and ask you, Kathleen Tyson, where do you think the capital market revolution goes next?
East. Wealth and markets are moving east. The London Bullion Market Exchange is owned by Hong Kong exchanges.
Yep.
And it has 3 vaults: JP Morgan, HSBC, and ICBC. Yeah,
ICBC. Yeah.
Are the 3 vaults. And, trading is increasingly, market pricing power is increasingly Asian. So that Shanghai Gold Exchange is now doing much higher volumes, much higher business. Moscow Gold Exchange is also doing business. Dubai Gold Exchange doing a lot of business, as you said. And so, they are all just, well, you can argue about which bit of Russia is Asian, mostly Asian. Moscow, I suppose, which side of the Urals is it on? Anyway, they're roughly speaking an Asian mass, a Eurasian mass.
Yeah.
And they are taking that pricing power home. And they are taking the wealth home. And they are not, the old model used to be you make money and then you invest it into the US, either into treasuries or into the stock market. Increasingly, they're keeping the money home and they're investing at home.
Yes, and I think you make a great point that, certainly Russia seems to be identifying as Asian, to use a much used phrase in recent years, when it goes forward. So the world is moving east, ladies and gentlemen. I'm going to leave it to Anne Berg to conclude, actually, a brilliant conversation with concrete examples within the historical and current context. Praise indeed from one brilliant woman of markets to another. Thanks you very, very much. Thank you, Kathleen Tyson, for that absolutely fabulous discussion about multi-currency mercantilism. I'm actually thinking sometime in the future it would be really great to get you and Anne talking about things. I think that could be a clash of the titans, disintermediate me very elegantly from the conversation. This, ladies and gentlemen, has been number 170 in the magnificent series of conversations that we've had. I do believe that we have, from a LinkedIn user, I'm not sure who that might have been, but thank you very much. Interesting insights into the global gold loo markets. Many thanks for sharing, Kathleen Tyson. I wonder, was that Martin Watkins by any chance? Thank you, Anne Berg. Thank you, Frederick Benno. Thank you, J. Tom or Tom J. I'm not quite sure which order you're titled, but thank you very much for your input today. And last but not least, thank you, Louis Victor Faulkner, for your comments as well. This has been a superb discussion. We'll be back next week with another enthralling show. But for now, stay tuned and rush off to Amazon, ladies and gentlemen. Buy your copy of Multi-Currency Mercantilism. You won't regret it. You will be helping to understand the future shape of bilateral commerce the world over. Well, All that remains for me to say is thank you very much for watching, ladies and gentlemen. My name is Patrick L. Young, a market builder the world over for anybody who's interested. Kathleen, thanks again for being a great guest. I wish you all, ladies and gentlemen, a great week in life and markets.
Thank you.